Higher than usual market volatility affected bulls and bears alike as crypto futures racked up $300 million in liquidations over a 24-hour period on Wednesday. Joining us now to discuss the crypto markets is Kaiko Director of Research, Clara Medalie. Welcome, Clara.
Thank you. Happy to be here.
Glad to see you. So give us your outlook here on the markets. You noted you're calling basically a relief rally with the recovery of USDC. So can you explain how that might have affected general crypto prices? USDC losing its peg earlier this week because of the crisis with Silicon Valley Bank. It's now back to about par. So why did we get this rally, though, in the rest of crypto?
So I think there's three main catalysts for the current bull rally that we're seeing. It's actually quite shocking considering just how chaotic markets were over the weekend. So first is, of course, the Silicon Valley Bank essentially depositor bailout, which reassured all holders of USDC that USDC is actually not going to have a depegging event. That instantly caused a big rally in crypto markets when that news was announced on Sunday night. And that rally has largely continued. On Monday, though, there was another bullish catalyst that was Binance. Binance announced that they would be using 1 billion BUSD and converting it into Bitcoin, Ethereum, and BNB. This is a huge amount of buy pressure on the markets. Right now, also markets, they aren't that liquid, so any significant buying pressure is likely going to have a considerable impact on prices as a whole. And then finally, the third catalyst is what's happening at the macro level. All eyes are on first the ECB today, but also next week, the Fed meeting, to see what they're going to do amid wider instability in the banking sector.
Right. You think they're going to basically pause on interest rate hikes, the Fed, correct? And so I guess my question is, with all of that, does this rally have legs? Because it seems like, a big buy order comes in, so that boosts up the price. But for how long? At what point will people keep their confidence in crypto if this banking crisis persists? Or will they just sort of say, you know what, I just need cold hard cash. Inflation is what it is. I don't need the volatility of crypto. I don't know if I can get my money back out of crypto ultimately because there might not be cash lines for me to cash out on. So does it sustain?
I mean, that's a big question, and I think we'll probably know right after the Fed meeting next week. It's not just crypto markets, it's all risk assets, which will be impacted by the decision that they take. And the thing is, inflation is still pretty hot in Europe especially. And so, everyone expected that they were going to continue these rate increases before three banks collapsed. Of course, the whole economy is different as it was 1 week ago today. But as for the legs of this current Bitcoin rally, the industry still faces a pretty big uphill battle, specifically when it comes to liquidity. Liquidity has really suffered now that we don't have Silvergate or Signature. They were crucial fiat payment rails that pretty much every market maker and institutional trader used to deploy capital across nearly 100 exchanges. So without this, we're likely going to see it's going to be difficult to react to price movements, but also to maintain this price momentum.
So we have breaking news just out. The European Central Bank has hiked rates by another 50 basis points. So like you said, inflation in Europe hot, and it looks like they're still pretty hawkish on the continent. Credit Suisse is in trouble. How is this going to impact the crypto markets going forward?
Well, I think that in Europe right now, Credit Suisse is not based in the Eurozone. And so there hasn't yet been a contagion style event. And I think that's probably why they decided to maintain the rate increase. But as for crypto as a whole, we really need to see what the Fed decides, I guess, given what we see in the EU and the 50 bip increase that we just saw today. And so really, it's all about what they decide next week. That's either going to probably create a big rally in risk assets or really dampen the mood, especially crypto traders realize that it's a lot harder to onboard into crypto markets now and also store your crypto with an institution that has connections to the U.S. banking system.
You also mentioned... You also mentioned that with the on and off ramps being impacted by Silvergate as well as Signature, where will crypto institutionals and companies go now then, and where will that liquidity go?
So I think there's a couple options. Easiest is probably offshore. I mean, where companies like Tether or other crypto exchanges keep their funds. But another option is in more friendlier regions such as the Eurozone or APAC. There are a few banks in these regions that accept crypto clients, and there's quite a few crypto companies actually based in Europe and APAC that have still maintained their banking relationships. So it actually presents a pretty big opportunity for these regions to accept crypto businesses. But another option, of course, is with stablecoins. That's mostly on the trader side. We already see the vast majority of market activity denominated in Tether and other stablecoins. And so that's likely going to increase the use of stablecoins throughout market activities.
Within that stablecoin universe, you're going to see, where do you think that will be driven to, USDT or USDC?
So on centralized exchanges, Tether currently denominates, I think, more than 95% of all Bitcoin trades. USDC is mostly used in the DeFi ecosystem. It's actually extremely important in DeFi. That's why markets reacted so strongly to the Circle news. So I think it really depends on the type of venue. Centralized markets, certainly Tether. DeFi will continue to rely on USDC and DAI.
What's interesting, you also noted that there's been there was a correlation, of course, that we've talked about here, the NASDAQ versus crypto. You see that correlation as splitting off. Can you explain on what basis, how many days basis are you seeing this correlation diverge and or rather shrink? And what do you think it's really signaling? Because is it because of this temporary blip in crypto, or is there a long-term macro reason why we're seeing that?
So this is a 30-day rolling correlation, and we've actually seen it consistently dip actually since the start of last year. And so I think it's interesting because the first month of the year, crypto markets were really crashing, whereas equity markets were sort of recovering. So we already saw a divergence. And then it sort of flipped. This week, we see crypto markets rallying while equity markets have completely collapsed. And so I think we're seeing the divergence in these markets has flipped and is now maintained, which is creating this decreasing correlation for both NASDAQ, which are tech stocks, but also European stocks. That's the 600 index.
All right. We'll wrap it there. Clara, thank you so much for your insights. That was Kaiko Director of Research, Clara Medalie.